Hey, what's going on? This is like day 4 or something. I'm going to quickly explain what my process and everything is, and then show some examples as well as the trades I took today on the same model. So basically, what I try to do is analyze the price action on 1 hour time frame. Okay, I just go to the 1 hour time frame and analyze in term of what impulse correction continuation. That which phase am I in? Am I in impulsive phase, or am I in corrective phase, or am I in continuation phase? Right. So basically this. So a price came up impulsively on 1 hour time frame, and we are doing this. So I know that we are in a corrective phase. And what's the characteristic corrective phase? To at least correct at least 50% or more before continuing to the upside. So I like to identify which phase am I in. Am I in corrective phase? Correcting, let's say if I was here, so I would have bias that we are in a corrective phase, correcting to the downside till at least here, right? So I could take sell trades here. And if I get a high displacement 1 hour candle, high displacement bullish 1 hour candle, then I would know that after the 50-60% correction, if I get that high displacement 1 hour candle, I would know that more likely that we are out of that corrective phase, and now we can continue to the upside and continue the trend, right? 1 hour time frame trend. So basically that's what I try to do. And also the second thing is, I always try to trade only I always try to strike only external range. So my all TPs are external range liquidity. And what's external range liquidity for me? Today's past sessions or previous days sessions. So today's past sessions or previous days, all three sessions are my external range liquidity. Now let's say, what does that mean? Let's say if even if when I'm 100% sure, like let's say we are here, right? And I'm 100% sure that price is going to go from here to here, I'm not going to get in here. Why? Because I don't trade from external range to external range. I don't trade that. Neither do I trade from external range to internal range, right? Neither do I trade internal range to internal range. I only trade internal range to external range. Now what does that mean? You can take the example of coin and a magnet, right? Let's say this is a magnet and this is your coin. If you place your coin too far away from the magnet, the probability of attracting to this magnet is nothing. You have to keep this coin just close enough to this magnet that it attracts, right? So what's that basically? So basically this coin is your price, and this magnet is your area of interest or your levels. If the price is too far away from your level, the probability of it going there is really low. But if the coin or the price is just close enough to that area of interest or to the external range liquidity, the probability of it going there is much higher, right? So that's why I don't, even if I'm 100% sure that price is going to reverse from one extreme to the other extreme, I don't target external range to internal range. Neither do I target external range to internal range. Neither do I trade internal to internal. I always try to do internal to external, and my externals are previous days all three sessions or today's past sessions. Is that clear? Now what's my criteria of buying? So if I'm buying, the last hourly should have been bullish. Let's say this last hourly was bullish, right? This is the top wick of this candle, hourly candle, 1 hour, and this is the bottom wick, this is top wick. And if I'm selling, the last hour should be bearish. Like let's say this was the last hour here, it was bearish, right? So if I'm selling, the last hour has to be bearish, right? So let's say I'm selling here in the current hour. Let's say if I want to sell, first of all, the 1 hour price action structure should be bearish. Most important. If the 1 hour price action structure is bearish and we are already closer to a external range liquid downside, this can be previous day low, previous session low, or any previous day's sessions low, and we are really close to it, and 1 hour time frame price action is bearish, then what I would look for is the last hour also bearish? If the last hour is also bearish, what I want preferably is above the opening of current hour, this is the 1 hour candle, on 1 minute, I want to see price making a higher low, higher high, and break that higher low on 1 minute. And as soon as it would break this higher low, I would just sell here, have my SL at hourly high or the top wick, right? Have my SL here at the top wick hourly high, and just target this nearest range liquidity. In the buying scene, again, if the last hourly is bullish, 1 hour time frame price action structure is bullish, and we are already closer to an buy side external range liquidity, then only I'm going to trade. Preferably, what do I want? it's the 1 hour candle. What do I want on 1 minute is price making a lower high, lower low, break that lower high on 1 minute in this new hour below the open of current hour. After lower high break, I would get in, have my SL at hourly low, right? Have my SL at hourly low and have my SL at hourly low this week and target this external range liquidity. Again, for buying scenario, the whole price action structure on 1 hour should be bullish. We are already closer to a buy side external range liquidity and the last hour is bullish. And then preferably what I want is price making a lower high, lower low, break that lower high below the open of current hour. If the overall time frame, 1 hour time frame structure is bearish, the last hour is bearish in the current hour, if the selling scenario, and we are already closer to an sell side external range liquidity, what I want preferably is in the current hour on 1 minute, price making a higher low, higher high, break that higher low, and out after break of higher low, out get in, have my SL at hourly high and target the nearest executive, right? But price don't always follow this perfect structure to move up, right? What it can do is, if everything is there, what it can do is just form this tail or wick of the current hourly candle, move impulsively away to the upside, and then you just tap this hourly open line, and you can just get in here. It doesn't have to form a perfect lower high, lower low, lower high break structure. It can just form the bottom wick tail, impulse away from the opening price, tap that opening price again of the current hour, and you can just get in here again and follow the trend, because this is also the price also moves like this, right? Higher low, higher high. It would tap that previous higher low and then uh, make a new higher high, breaking the previous higher high, tap the previous higher high, making a higher low, and make a new higher high. Right. This is how price moves. It doesn't have to make a proper structure of lower high, lower low, and lower high break below the open of current tower if it wants to move, right? Because take the example again, coin and magnet. If its price is too close to an area of interest or exchange liquidity, right, it won't. Sometimes it doesn't form the perfect structure. It just strikes that level, right? It doesn't form the perfect. Is it clear now? So let's say if the 1 hour time frame price structure is bullish, okay, we are here. We know that we are moving impulsively away. There is some external range liquidity. You can just target internal range to external range using this entry model. Okay, so let's use this on chart. So let's take example of today. When did I sell? When did I sell here? I sold here somewhere here. Okay, 139 I sold. Okay, okay. Let's go to 1 hour time frame, and you have to analyze this 1 hour time frame and try to find out which phase are we in, impulse correction, continuation, and then mark whatever the external range liquidity in that direction is, and strike that. So at the time of 139, was it 139? Yeah, 139. So and I sold at 139, right? So let's 139 is the second hour of London. So which is it? So this is the second hour of London, 130 to 230, and we sold at 139. So if you were here after the first hour of London session closed, and it closed a full bearish hammer. The first hour of London session, which for Indian time is 12:30 to 1:30, was a full one hour bearish candle. So what you can make up, what you can draw the conclusion is, there was some this level, what there could have been some level which gave it a strong rejection, that it had to make this bearish hammer, and or you can take conclusion of this like this was a impulse, we were in a corrective phase, right, and now we can impulse to downside again. Or you can analyze it as if there was some buy side liquidity which took the stop losses of the previous sellers here, and then got some more momentum downside, whatever it is. So if you want to sell, right, the last hour should have been bearish. So when I sold at 139, so what was my thesis after analyzing 1 hour time frame? After seeing this strong bearish hammer, my thesis is 100% that we were in a corrective phase, and now we can continue downside after taking the buy side liquid of this level, right? So I got my thesis. Now can I sell at 130? So was the last hourly bearish as well? So yeah, the 12:30 to 130 was bearish. So now you can sell in 130. Okay. So again, what did I say? What do you want? Preferably what do you want if you want to sell is, uh, wait a second, preferably what do you want if you want to sell is, if my bias is bearish, what what do we want? Higher low, higher high, break of higher low, right? But we do not get here. Instead, what you can also get is price making a tail or the wick of this early candle, impulse away, tap this level again, and then you can sell here and let the price continue downside. All right. And what would we target? So what's the nearest standard range liquid downside? Why downside? Because the I can say the price action structure on 1 hour frame is downside. So the nearest standard range liquid downside was this, a shallow. Today is a shallow, right? So we would target this. Today is a shallow. Now, what price did here is when it opened in the second hour of London. So the first hour of London was full bearish hammer. So price didn't made the top wick, came down, went up, came down again, and gave us a closure. So I was like, is it going to give me a proper structure or not? So I was not sure. So as soon as price made this tail or the wick and went up again inside this, after this bearish candle, I just sold here. I also thought this was kind of a 1 hour CRT. So let's say this was the top of 1 hour. This 1 hour was fully bearish hammer, right? And in current hour, we tested this. So it's kind of a CRT. This doesn't fucking matter. I didn't took the trade because of the CRT, but yeah, it helps. Any if you're selling and you have head and shoulder pattern and you are on the top of the right shoulder, it always helps. It's always an added confidence. But I did not took because of that. I just took because it has already formed the top wick of this early candle and came out of this early open. This is the early open line, came out of this, and as soon as it retested, gave me one bearish 1 minute candle. I just sold here, had my SL at this swing, and I just left this trade uh, 2:2. Why 1:2? Because I don't target more than 1:2. Max I do is 1:2. And the entry model I used was this BOS tap and near ERL. I reached 0.5%. I sent this trade here in my I sent this trade to my friends in a server. Let me just open that. So I think I mentioned this trade here of this one. Yeah, here at 141. Uh, I said to sell, had my SL at this swing, and targeted a shallow, which was 1:2 because I don't take more than 1:2. Right. So this was the trade, and it completed. I can show it here. It completed really well. So this my risk was 56, and it gave me more than 101. So that was the trade. Again, we did not got the Harlow Harlow break, but yeah, we did got this tail, and it closed below this current hour open. So I was like, now we can just move to downside, but yeah, it went up, kind of formed this right shoulder and 1 hour CRT, and then came a bit down, but it still went up, and eventually it did hit my TP. Again, the second trade I took on basis of this was on US 30 Dow Jones. So if you when did I took this trade? At 3:45. Okay, so let's go to the 1 hour time frame at 3:30 hour. So what was the 3:30 hour? It was this. I took trade in this hour. So at the time of this, what's the price action structure on 1 hour time frame? So at the time of this candle, uh, let's just mark this and don't look beyond that. Let's analyze before what's price doing. So I have some conflicting beliefs here because I can see this impulsive move to the upside, a correction, and it can impulsively move to the upside again, right? Impulse correction continuation, it can do this, right? Another thing you can say is here, it was an impulsive move to downside, we corrected, and now we can go to downside again, right? So we have two conflicting analysis here. This is impulse, this correction, this can continue, or this is impulse, this correction, and we can go to downside. Now which one are you going to believe? Now it comes down to this. If you see impulse correction continuation, you have two conflicting beliefs in the shorter time frame. What are you going to believe? So I always, again, the head and shoulder pattern is, that's why so powerful for me. It gives me this. So the current, if you see, this was kind of left shoulder, this was the head, and this was the right shoulder for me. I emphasized on this. And also, if I go to the 1 minute time frame, right, today in the Asian session, we had already taken previous day high. See, this is the Monday Asian session. This was the Friday's Asian, Friday's London, and Friday's NY. Today we have already taken previous day high in a sense, right? So if you have taken previous day high, the more or less it and if the overall, if you see, the overall market has been consolidating. So in a consolidation market, if you've taken a previous day high, more or less you're going to come to the downside. And because of that, and because I analyzed this uh, left shoulder, head, right shoulder, and we were here at 1:30, sorry, 3:30 hour. Despite this impulse correction continuation thing being there, I did not emphasized on the, I did not keep my bias as bullish. Instead, I kept this bias impulse correction and gonna continue downside. Why? Because we had already taken previous day high, right? And we had this kind of a head and shoulder pattern there. So that makes sense. So when I had already had my overall bias, when I already had my overall bias, right, that my bias is not impulse correction continuation to the upside, rather it's impulse correction continuation to downside, because we had taken previously high whatever. uh, so I had my bias down. And if I want to sell, was the last early bearish? Yes, the last early was bearish, 230 to 330. We could have sold in 330. And what's the external range liquidity to downside? We can just go on 1 hour time frame, and it would have been this that day's same, today's Asia low, so Monday's Asia low. So today is Asia, sorry, Asia low. So this would have been our nearest external range liquidity. And what did I say? Uh, if my bias is bearish, last hour has also been bearish, and one of price action structure is also bearish, and we are near to an external range liquidity. So let's see here at the time of this entry. Uh, at the time of this entry, what's the nearest external range liquidity downside? Its Asia low is 65 pips. What's the external range liquidity upside? That is 126 pip. Right, this 126 pip. So the external range liquidity downside is more closer to the external range liquidity to the upside, right? So you can again take the example of magnet coin. The coin would attract to the level which is nearest to it, and the last story is also bearish. 1 hour time frame price action structure is also bearish, right? So last story is bearish, 1 hour time frame structure is bearish, and the external range liquidity to the downside is nearer than external range liquidity to the upside, right? And now everything is set. Now what do we want? If our bias is bearish, preferably higher low, higher high, higher low break above open. If we don't get that, and we just get this top wick of the early candle, it impulses away. As soon as you tap this opening line, you can just sell in here. So again, that's what it did. The current hour opened here at this candle. It impulsed away, didn't form the top wick, but went up. As soon as it formed the top wick on the first bearish candle, I just sold here. And I saw where my TP is going to be, so that would have been a shallow. And I just had my SL uh, where it's just 1:2. I don't want to take more than 1:2, so I just measure wherever my TP is going, and extend my SL so that it matches at least 1:2 and not more than that. So I had my SL here, and I gave this trade as well in the group. I can show it here, US 30. So yeah, so fourth trade, and the last trade of the day, sold US 30 at 348. So I sold here after the first bearish candle of this top wick I saw. First it impulsed away from the opening hour, then went up again from the top wick, and after the first bearish candle I sold, had my SL there and targeted 1:2. And this trade also hit TP. Let me show it here. So this was the trade. So my account is 10K account, so $57 SL, and this was the TP here. So that's the trade, risking 0.5%. Again, it's pretty simple. You just target the external range liquidity, that too when price is closer to it, that too if the overall 1 hour time frame pricing structure is in that direction, that too if the last hourly trend, last hourly candle is in the same direction where the overall trend is and where the nearest external range liquidity is, and you get in with either MSS of higher low or BOS tap retest. You can just take the trade on this sub 2 entry model, have loss per trade as 0.5% and max 1:2. Don't take more than 3 trade a day, because you can get 3 consecutive losses in a row. So if you get 3 consecutive losses in a row, you're done for the day, right? And if you make already 2% on the first two trade, you're also done for the day. So that's it. That's the simple strategy I use targeting the nearest short range liquidity, that too when I'm already closer to it, that too when the one hour price action structure in that direction, that too when the last only candle closed in the direction where nearest short range liquidity is, and where the overall time frame trend uh, direction is. That's it. Pretty simple.